Big changes are on the way for public sector bank employees across India. The Finance Ministry had just issued a game-changing advisory aimed at overhauling the transfer policies for public sector banks. These updates are set to revolutionize how transfers are handled, ensuring greater transparency, fairness, and employee satisfaction. Let's break it all down for you. So, why is this happening? The current transfer policies in public sector banks have faced growing criticism over the years. Employees have raised concerns about lack of transparency, inconsistent practices, and unfair handling of transfer requests. To address these issues, the Department of Financial Services under Finance Ministry has stepped in with a bold plan for reform. The ministry's circular has three main goals: promoting transparency, creating uniform policies across all banks, and ensuring non-discretionary approach to transfers. Essentially, they want to make sure everyone is treated fairly and there is no room for bias. Now, let's dive into the details of what is changing. Here are the highlights. First, clear administrative layers. Banks will now clearly define the administrative layers such as regions, zones, and circles, etc., which are involved in transfers. Second, minimum and maximum tenures. Banks have to set minimum and maximum tenures at each layer, which will bring uniformity and predictability to transfers. This will ensure people not getting posted in regional and zonal offices forever. Third, strict timelines. Transfers will have strict timelines, ensuring they happen smoothly and without unnecessary delays. Each year, transfers may be completed before June. One of the most exciting changes is the push for automation. Banks are being encouraged to set up online platforms where employees can indicate their location preferences, access the bank's transfer policy, check seniority lists, and view current vacancies. This is a huge step towards making the entire process more transparent and accessible for everyone. The circular also emphasizes linguistic and regional factors. Here is what it means. Officers up to scale 3 should ideally be posted in regions where their linguistic skills match the local language. This will enhance customer service and make employees feel more at home. Certain regions will be marked as difficult areas. Employees who complete their tenure in these difficult areas will get priority when applying for transfers elsewhere. The revised transfer policy is also more compassionate. It expands the grounds for transfer requests to include marriage, a spouse, medical needs, maternity, childcare, and even situations where employees are posted far from their homes. Plus, banks have been instructed to make efforts to post spouses working in central or state government jobs to the same or nearby locations whenever possible. So, what happens now? Public sector banks have been directed to modify their transfer policies in line with these recommendations and seek approval from their boards. The changes will be rolled out starting the 2025-26 financial year. Banks are also required to send their updated policies to the ministry for review. This is a landmark step towards creating a more employee-centric approach in India's public sector banks. By addressing long-standing grievances and making the process more transparent, the Finance Ministry is ensuring that both employees and customers benefit from these changes. Let us know your thoughts on this reform in the comments below. Don't forget to like, share, and subscribe for more updates on finance and banking reforms. See you in the next video.